We're going to analyze natural gas before the week begins, starting at 6 p.m. Eastern Time. That's when the futures markets open. So we're going to go right to the weekly chart, and we can see that for the week we were down. This is the first down week in 5 weeks, so 4 to 5 weeks. We have been bullish. Now, a couple things as to why potentially we had a down week. Maybe technically we had a strong move higher, so potentially this is just a pullback. One of the issues, though, is that we closed below this uh, resistance area, so that's not good news. So because of the shortened week due to 4th of July, the natural gas inventory report came out on Friday. And we had a build. Pretty much, we're roughly 25% higher than we were a year ago, and roughly 14% higher when it comes to the 5-year average. In addition, we've seen in prior weeks the rig counts have gone down. Last week, the rig counts went up plus 11, as the markets were expecting 8 more rigs to come off the markets. All right, so before we continue with the analysis, let's look at some of the other headlines. We have Europe's gas storage is filling too fast. Europe's gas storage is filling more slowly after prices fell sharply in the first half of the year, but further slowdown will be needed to prevent space running out before the start of the winter 23-24. So this past winter was relatively warm around the world. In the U.S., there was a lot of rain in the west and on the east. Then seacoast, it was a mild winter. And in Europe, it was also a mild winter. So because of that, less natural gas was used. So during the shoulder season, there was less was needed to fill the storage tanks. All right, let's go back. Again, as I mentioned, natural gas rigs see a double-digit rebound, bucking the trend. Again, weeks ago, we were downtrending. Now we're increasing, probably again because of natural gas prices have been moving higher, right? So it's all about supply and demand, right? You want to take advantage of when natural gas prices are higher, so you supply more natural gas to the markets, but then in turn, it's going to put a dampen in the price because now there's more supply. What do record global temperatures mean for natural gas demand? So this past week we saw 2 days in a row the hottest days uh, in the world. So yes, the Earth is heating up. Whether you believe in humans expediting that phenomenon or not, the Earth is definitely heating up. EIA hefty storage build comes with asterisks. Natural gas futures, a near-term bounce seems likely. Natural gas down 8% on week as U.S. weather models suggest mixed trends. This is crazy. Natural gas prices forecast. Natural gas continues to see lull. Right. So, I mean, what do you believe? You got expecting a bounce, mixed trends, might be consolidating. Let's see what this is saying. Not so fast. Gas bulls. The run to $3 pricing may have to wait a little more, as U.S. weather models show an easing of heat wave of the past 3 weeks, as near-term temperature outlook suggests mixed trends. So this is important. Weather is very important to the direction of natural gas prices. Let's look at this article here from FX Empire. From a technical standpoint, The market's only content to hang around and test the 50-day moving average. That's important. And we'll look at that on the charts. One primary driver affecting the natural gas market is the need for European countries to replenish their gas stocks to ensure sufficient power and heating supplies for the winter season. Again, last year they had a lot less, um, or 2 years ago, they had a lot less natural gas in their storage tanks, as they had to withdraw from those tanks due to the Ukraine-Russian war. Amidst ongoing market uncertainty, it is crucial for traders to exercise caution when determining. Okay, yeah. The natural gas market is particularly susceptible to the summer lulls, and it is prudent to approach trading decisions with care. Although the market remains in a state of flux, the need for the European Union to refill its gas reserves will likely create buying pressure at current levels. Traders should carefully assess market dynamics and consider potential buying opportunities that align with their risk. Okay, yeah. All right, let's look at this one. This is coming from FX Street. A near-term bounce seems likely. Considering an advanced print from CME Group for natural gas futures markets, open interest rose for the third session in a row on Thursday. All right, so that's why they're saying you have open interest rising with the price rising. That means that people are going long. Volume instead went down by around 15,000 contracts, reversing part of the previous market build. Again, I think this was due to the 4th of July weekend. I did notice that volumes were somewhat sluggish relative to other weeks. Natural gas faces contention around the 260. Maybe this is where the 50-day moving average is. Let's look at that on the daily chart. And the 50-day moving average is this red line here. That's at 250-ish. Okay. Prices of natural gas dropped for the third session in a row on Thursday. The move was in tandem with a small tick in open interest and diminishing volume. That said, there's no change to the broad consolidative phase around the commodity. All right. Well, so the news is mixed. We're going to get into the analysis, and we're going to start with the weekly chart. Again, going into the fall, into the winter, I want to see if price can get to the $4.50 range. That's not asking for too much due to the fact that prices were at $10 in August of last year. However, a lot's going to depend on Mother Nature, whether price can continue to climb this high. This was the daily buyers level at the 150 level, but price never got back down that low due to you had bulls defending the $2 area, not once, not twice, but 3 times. And then the seasonality kicked in, where from June or early July to November, prices kind of move higher. All right. So again, prices closed below the resistance area at 260. However, what you can see is that this blue line, that's the 13 weekly simple moving average, it is moving higher. And maybe within the next, next couple of weeks, you get a crossover, which will be bullish. Potentially prices, if they're going to continue to move down, bumps and hits this 26-week moving average. That's at the 250 area. According to that one article, that's where the 50-day moving average was, at that 250 level. So let's go there. Now, I will say that the 250 level is somewhat of a psychological number. As smart money, that's how they look at the charts. In whole numbers, half numbers. So let's put a line at the $250 area. Let's do that in orange. So if prices continue to decline, Maybe we get a pause at the 250 level. As you can see, we have a trend to the downside, making lower highs. The price is going to resume higher. We really need to breach that on the daily chart. All right, I wanted to go down, continue to go down time frames. All right, so let's see, volume wise, see this green extended range candle, but volume is not ideal. It is, I'll say, average. So I don't know if that area is going to hold. Also, I don't like the price structure. So let's go down to the 4-hour chart. Let's go down to the 2-hour chart. All right, so volume picks up. This is 10 o'clock. All right, right here, this is a 2-hour chart. You got a rally in price, one basic candle, and then a rally out. Price tried to come back, couldn't get quite there, depending how you draw. So let's do this here. And let's make that pinkish. Okay, let's see how that volume compares to. That's nice volume. See that candle, that volume there supersedes all volume. Okay, so this is the level in the sand for me. $2.40. All right, so let's go back out to the daily chart. So you got two levels that I'm watching. This week, the psychological level is going to be the 250, but more so, it's going to be this $2.40 level. As you saw, let's go back down to the 2-hour chart. That was where we had a rally base and a rally out. Price tried to come back to that zone, couldn't. So you know that there are buyers here. However, it's really going to depend on what the daily candle's doing. You know, a daily candle, consider that a truck. Consider the 2-hour time frame or a candle a motorcycle, right? So in a crash, you know which one's going to win, right? All right, so that's what I'm looking at for the week on natural gas. I do trade natural gas, and just have to see how the overnight trading goes into the beginning of the regular trading session that starts at 9 a.m. Eastern time. Last but not least, the article mentioned $3. That is my short-term target. Again, potentially we are just moving down to move up. Time will tell. Thanks for watching. Subscribe. Please like the video.